Hi there, a very good morning and good afternoon and good evening to all of you, depending on wherever you're watching me. This simply Stocks, and I'm live in this live session with you all. I hope you all are watching and hearing me properly at the moment, and the stream is going live throughout. I'm live through the OBS network, and this is not a promotion. Just wanted to check the software altogether. Uh, so today I'm going to talk about at least three or four stocks from one of the spaces which could do extremely well. This is the infra space that I want to talk to you about, and one by one we'll go through it. And plus, I'll answer your queries as well. I'm sorry, I'm a bit late than what I have probably told you about as to where I would be. I mean, when I'll be live, but just a few things that needed to be sorted out. So let's get things going in earnest, and uh, let's just discuss about these talks one by one. I hope you're able to hear me clearly and watch me clearly. Kindly do message me for that, and we'll get things going post that. So it has been a topsy turvy ride for we as investors, and things have not been that great. Uh, Let me just open up the Nifty here, and we'll discuss about everything about the markets, and then we'll come to these four stocks one by one. So let me open up Nifty 50 on you can say money control. That's where I like it to analyze in detail, but we can do it right here on Google as well, just to look at a simplified chart overall. So if you look at the 6 months chart of the Nifty, and I'm taking a simple chart on Google, and you look at it, that it made a peak of around 18,800 at the start of December, and since then the you can say market has been declining. And if you look at it, so let me open up the 6 months chart again. I hope you're able to view clearly as well. uh, Let me have a look. Okay. So kindly do message me, Ashim. Hi to you. Hope you're able to hear me clearly and all. If you can do that and watch me clearly, then do let me know for that. All right. Uh, I think it is fine. The stream is going fine. So let me get things going now. So let me look at uh, the Nifty chart again. So if we look at it from a 6 months perspective, Nifty made a high of 18,828.30, which is the 52-week high in 880, actually 18,900. This was around 1st of December, 2nd of December, and then the decline happened, and today it is around 17,600, and primarily because of one group that has not been doing that well. So the support lies around these levels of 17,500, and if it dips further than 17,300, as I explained earlier also, is a strong support. I have a feeling with the way the gyration is taking place, although today Nifty did decently well, uh, I have a feeling that this month could go up and down, and we could head towards 17,000 levels or so, and we should have a final, you can say, medium term bottom sort of a range between 17,000 and 16,800, where everything will be flushed out. This was the level in October of last year, and then things should start moving. So basically that's what we are looking at the moment, from 6 to 8 months perspective, that there is a chance that 17,000 to 16,800 could come in. Now, if we are looking at, say, the small cap index altogether, and we look quickly have a look at a 6 months chart on that, then we have an understanding that there was a sharp dip during December to 27,300 levels, and just recently we fell to 27,300 intraday, uh, just on the 31st, and we started, you can say, moving up from there. So I think 27,000 levels are pretty safe at the moment. We went to 28,000 today, and so around 27,000, 26,500, we should find a bottom on the small cap index. And remember, throughout the last year, uh, small cap index did not do that well. So if I take out the 1 year chart, beginning from 3rd of February, we were at around, you can say, 29,800, and today we are at 28,000. So we are down 5% on a year on year basis on the full index. Now, if the full index is down 5%, the stocks ought to be down 7 to 10%, most of the stocks. And that is exactly what has happened. And so what has happened is most of the retail investors and most of the, you can say, investors who are not HNIs, who are not large traders, investors in the market, they have not made any money or ended up making any money. Even most, you can say, fund managers have not made a lot of money, uh, but things could change going forward from here on in. So that's what I perceive, that things could get better in a month or so. I think these scenarios with respect to the markets should change, and we should start moving ahead. But for that to happen, if I look at the charts again, we have to uh, go through, you can say, 17,000 levels. We have to go through 27,000 and closer to, say, 26,500 or so. If you look at it, on 2nd of June, we were around 26,600. So around 25,400, 25,000 to 25,500 would be the levels to really look at with respect to the market, in order for us to find a relative bottom in the market. So that's the call on my behalf with respect to the market per se. Now, coming to the four stocks with respect to the index that I feel, or with respect to the budget that I feel are going to do well. This is more or less from the capital goods space that have done exceedingly well over the last 1 year, and should do well post the budget, or kind of budget that have come through. The first one in this list is Siemens. I believe Siemens over a 3 to 5 year period, over long term period, looks good, looks attractive. Hasn't come out with the December numbers as such, but if we look at the numbers, because of the capital goods, capital expenditure that the government is doing, most of the capital goods stocks should end up doing well. Now, Siemens, if I look at year on year performance, since we are looking at 3 to 5 year perspective, let me have a year on year performance. And remember, they have a year that is between September and September. So over the last 4 years, what has happened from 2019 till 2022? So 2019 was before the pandemic. So around 13,100 crores. If I add up other income, which is here of around 280 crores. Uh, Sorry, if I add up other income in 2019, which is around 400 crores, then we are looking at somewhere around 13,500 or so. If I add for the sales of 2019, then we are looking at 13,400 crores for 2019 as the sales, and it has grown to around 16,000 crores in 2022. But what is interesting to note here is that in 2020, because of the pandemic, we had a strong dip towards 10,000 crores. Then there was a recovery in 21 towards 13,600, and now finally probably we are out of the woods with respect to the performance on the top line, with a sales of around 16,138, and we add up, you can say, other income, uh, that is around 590 crores. So this adds up to somewhere around 16,700 crores. So this is a steep jump from those 2019 numbers, and that is where things look good. Margins have remained stable over this 5 year period, over this 4 year period, from 11% in 2019 to 11% again this year. So margins have not got a hit, and overall profitability has increased 1550 crores in 2022 versus about 1100 crores in 2019. So a steady progress in profitability and EPS, and that is why these stocks are for, you can say, 3 to 5 year period that somebody uh, ought to keep with respect to this market. So that is a short, you can say, analysis of the numbers per se. The market cap is pretty strong, around 104,000 crores. Yes, it is trading at a higher PE of 82 or so on a forward PE basis, but it is a pedigree stock and has been performing extremely well over the last 4 to 6 quarters. Uh, if I look at its, you can say, the P/E ratio, it is on a higher side from the last, you can say, somewhere around 1 year or last 1 year or so. So there is a chance that the stock could dip in you can say, strong bear market, or in a market where the performance is not that great. But overall, it seems that over a 4 year period, 5 year period, this should generate to you around 20% CAGR over a 4 or 5 year period, because the stock could, company itself could grow from that, in a perspective, at a 20% CAGR. If we look at its ROE of around 11 to 12%, it is growing at the moment. Return on capital employed is around 16%, which is pretty decent. Yes, it is trading at highs. So where you need to buy, that is the basic, you can say, uh, basically that is what everybody wants to know. So currently is at highs. What you need to do is, although it is trading closer to its 50 DMA, you need to wait for a small dip. If you get it around 2800 to 2900 levels, between 2800 to 2900, Siemens can be bought for a 18-20% CAGR growth. You see, reserves have grown appreciably from 9,000 crores in 2019 to 11,500 crores right now. Borrowing has been virtually nil, so it's a debt-free capital goods company in that regard, and they are into a lot of businesses, not only capital goods. You look at the promoter shareholding of 75%. FIIs have remained stable, in fact have increased in December to around 6.7%. There has been a little dip for DIIs, but they are strong at around nearly 8.8%, and very little public shareholding is there of around 9.5%. Even in public shareholding, uh, uh, there are large investors that are invested in the stock. So overall, Siemens is a good buy around 2750, 2800 levels. Second stock that I want to bring in, this is, you can say, the erstwhile favorite of everybody, and this is Larsen and Toubro. So post this, you can say, budget, I feel Larsen also look good, and that is why these stocks have not fallen that much. 2150 is the price at the moment. Large stock, and again, this could give you at least 20% CAGR over the next 4 years. So a doubler over, you can say, 3.5 years. Now this is an interesting company because this one is trading at around 30 times, which is very reasonable in terms of PE, although its ROE is nearly same. It was around 12%, 11.5% for Siemens. It's around 10% for Larsen. And if you look at the numbers per se that we were discussing for, you can say, Siemens, in terms of Larsen and Toubro, the March 23 numbers is expected. But we have a situation where uh, between FY19, which was the pre-pandemic era, around 17% was the margin. Margins were pretty strong, and they had around 112,000 crore sales. It has grown to 150, 160,000 crore that is expected this year, but the margins have dipped. So in 2019, we had margins that were pretty stable at around 17%. In 2023, it has dipped to around 13-14%. Now, although you'll say that, okay, margins have dipped, then why to buy? The company isn't doing that well and things aren't looking that great. This is exactly why you need to buy now, because I feel these are uh, margins which are bottoming out at around 12-13%, and hopefully from FY24 onward it seems like things should look upwards. If we look at quarterly numbers, December numbers are out. We had a situation where sales have grown by around 12% or so, from around 39,500 to 46,300. So it has been a decent enough growth on the sales front. Remember, it's a huge company that we are talking about. It's not a small cap or anything. Margins have been 14% versus 15%. It's not that margins are back to 11% or so. In June, they were around 11%. So things are coming back if you look at it. And I think things should stabilize even more as they get more orders going forward. If you look at profitability, the tax structure is different for every quarter, up and down, but eventually profits have grown. So 3,060 crores of December quarter profit this time around versus 2,500 crores of net profit in say December of last year. So there's been a clear growth of 20% on the profit front, and that is what we see on the EPS as well. 14.6 rupees versus 14.6 rupees in December 21 versus 18.2 rupees in December 22. Plus, it gives a very decent dividend on the dividend front as well. It is a pretty decent company to look at. 1% dividend yield at the moment at highs, when it is trading at 1.7 time price to sales, which is very interesting. Can be bought here. Yes, it has a slightly higher P at the moment and slightly expensive, but if you look at the charts, I think you can buy around 2100, something like Siemens can be accumulated at these levels. So this is something that one needs to probably keep an eye on. So another stock that is pretty interesting, and somebody looking to invest on a safer side from a period of 3 to 4 years can look at Lars and Tubro as well. A couple of more stocks that has crossed my mind during this period has been, one has been Cummins India, another stock that has done decently well. In fact, another stock from the capital goods space uh, that is doing well and at highs. So Cummins has been performing very well. A company that is slightly lower in market cap, mid cap company, 40,000 crore market cap at a PE of 45. So let's look at its numbers, trading at virtually highs at the moment. So if we look at its numbers, these are September quarter numbers. 1950 crores versus 1730 crores, a decent enough growth of 15% on the top line. uh, Profits have also grown around 15% or so, and margins have remained very stable at 15%. And that is where the thing is that these companies are now producing margins which are coming back to normalcy versus margins that were dipping earlier. Eventually, the profits finally were 252 crores in September versus 220 crores last year in September. December numbers are not out yet. Overall, over a 4 year period, if we look at from 2018 to 2022 and leave alone 23, we have a situation where 5,000 crores of sales have grown to around 6,100 crores. It dipped in the pandemic years. You look at it, 5,100 and then 4,300, but things have come back big time, and this year could be even bigger uh, for the company. Again, in 2018, they had profits of around 708 crores. In 2022, they had around 80 90 crores. So again, a very decent increase in profitability. Uh, Again, a company that gives a very decent dividend. And if you look at the balance sheet in L&T, I didn't look at it because everything is in most cases pretty clear with respect to Larsen and Toubro, and this is one of the stocks that one should look at. In Cummins also, reserves have grown appreciably from March 18 at around 4,000 crores. It has grown to 5,000 crores even in difficult environment. uh, Debt is there, but not that much. Probably working capital debt is always there. And if you look at the shareholding pattern, public shareholding is around 11% or so, 11.6% or so. Again, very decent promoter shareholding, etc. And even that in that 11.6%, 1.7% is with SBI Life Insurance. So you turn that down to around 10% public shareholding is with, you can say, normal stakeholders, or you can say shareholders that are retail investors. So overall, Cummins is my third pick from a 4 5 year perspective that could give you that 18 20% return. And the fourth one in this list is ABB. I would say ABB India is something really to look at. 2840 is the price. This one has dipped reasonably from the top and looks attractive at these levels. Even on a PE basis, things have dipped from very highs, although it is still trading at expensive valuations at around 97 times on the PE basis, but has dipped from the top. Again, a mid cap, you can say, cap goods company at 60,000 crore market cap. Uh, if you look at its comparison on a consolidated basis, on the on a standalone basis, if you look at it, again December numbers are not yet there on the screen now, but till September, what they did was, uh, from year on year, things have been good. 1780 crores was in September versus 2120 crores this time around. So again, a decent 22 23% increase. Although again, 10% is there, you can say, margin. It has remained around 10% stable throughout many years. But this time around, what has happened is that it did not dip in difficult environment, and that's the best part. And eventually, profitability has increased because of other income. Other income came out to be around 88 crores versus 15 crores or so last time around. So overall profitability has been pretty decent. And if you look at overall sales from a 3 4 year perspective, then this year has been pretty good. And hopefully FY22, uh, they would come out with around 8,500 crores of sales, versus 2018, where 6,600 crores of overall sales is what they ended up clocking. Again, on an EPS basis, EPS should be around 44 45 rupees versus 24 rupees in 2018 December. So overall, things look good. If you look at it, 511 crores in December 2018, and once December numbers are out, it could be closer to 930 940 crores profitability this time around. So decent growth over a 4 year period. Again, a company with very little debt. That is what I'm looking at in a company which in an environment or in a business which has high gestation period, and you are not in a direct business of cash, you can say, companies that work in cash. So debt of only 30 crores borrowing. So this is pretty good. And if you look at the shareholding pattern, 75% with promoters, FIIs have 7%, 9% are with DIIs, only 7% public shareholding, 7.7%. So pretty decent in there. So another, probably the fourth stock that I would like you to look at is ABB from a 4 5 year perspective. That would give you 18 20% return. So these are some of the stocks that really could look good, and hopefully should perform as we go along, going forward as well. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Okay, let me have a look. Relaxo, Loris Lab, Jubilant Foodworks. Should we sell based on See, if you're a short-term investor, Ashim, in these, then yes, on your stop loss, if your stop loss gets triggered, and basically, if you're psychologically you're not comfortable holding on to the stock because the stock is down too much, and you feel that you can shift to some other better company, yes, you can. Numbers have not been that great, and that is exactly why these companies have fallen. Somebody wants to buy a fresh, I would say Lawrence Lab around 330 looks good from here on in, not a fresh buy rather than somebody who really want immediate returns, but from a 3 4 year perspective, out of these companies that you mentioned, Ashim, Loris look good. So that's the call. See, basically in these cap goods companies, what is going for them is that the government. So if the government stays for the next 5 years and next year they come back to power, I think next 5 6 years could be good for really good for these cap good company, and they'll continue to give you that 15 20% continuously. So that's the call. See, the problem is the sectors keep turning around, so you might shift from a relaxo or a Loris lab, and then eventually what will happen is 2 3 months down the line, this is where the money comes in, the big money comes in. So do not do that just for the sake of it. Do it if you feel like, okay, cap goods is something, in your opinion, if you're comfortable getting 16 17% CAGR, maximum 20% from that perspective, then definitely this is something to look at. If you're looking for higher returns, I think that is available in mid cap pharma, mid cap IT, and in other sectors. But stable 18 20% return is definitely available, even at these levels, with these, you can say, cap good companies. Uh, I would say in a disclaimer, I am invested, Danish, into this stock, and I would say VBL, I mean, at around 1100 looks pretty decent compared to any other stock. So that's the call on it. Probably VBL is something to be looked at. GMR is decent, but I would still suggest that if you are looking to buy uh, into, you can say, growth story or infrastructure or capital spends, then you better look at something like an Asian Paint, something like a Polycab on declines, something even in the cap goods space, which I've just mentioned, or not to just get into something like a GMR for that matter. Uh, Check three man. The problem is not the results with Bajaj Finance. The problem is the commentary that that the company has come out with, and in that, what they mentioned is that the growth will slow down going forward. So the growth will not remain the same. It won't be that the growth continues to be uh, at that 25 30% that we are very used to see or comfortably seeing in Bajaj Finance, and that is why large investors are now exiting Bajaj Finance after 8 10 years of investment. So long term large investors are exiting, and that is why we are seeing such fall. And probably after a year 2 years, or after a decent fall in that stock, one can definitely look at it. So if there, as there is a lot of query on Jubilant Foodworks, let me have a look at Jubilant on the screen, and will let you know. This is one of my favorite stocks, but the company has not done well on the numbers front, and that is why the PE has shrunk. and a lot of things have happened. So let me have a look. So this were the December numbers. Somehow I believe that the numbers are not that bad. Again, the commentary is what is very jarring, where they say that they could maintain the same margins going forward, and the margins could be under pressure little bit. That is what they have mentioned. So currently what they did was around 1330 crores uh, in the December quarter versus 1210 crores. So there was an increase of say around 10% on the sales front. Not that big. They used to do pretty decent numbers on the sales front, or 10-11% sales growth that have come in, with margins being stable at around 22%. But remember, last year they had margins of 26%. So it has been continuously dipping, and this is the issue. From around 26, then 24, 24, 26%, the margins have suddenly gone to 22%, and they are saying that they are going to stabilize the margins around 21, 22%. So when the margins have shrunk by 400 basis points, that is a decent enough decline in order for people to sell and look at other companies which have greater margins of 30-35%, say in the IT industry, or in pharma, some pharma stocks, or in other sectors where the valuations have dipped already. That is the issue. Eventually the profits were around 111 crores versus profits of 180 crores. And basically what has marred things in here has been other depreciation and interest cost and etc. That have not worked in favor. So eventually what went on was the fact that they had in December margins of around 26%. So 4% of margin dip meant that 317 crores of profit became 286 crores. So how long this decline will continue year on year, we don't know. But the way the profitability has shrunk, it is a complete opposite of what a company could end up achieving if they are growing fast. So 179 crores of profit, operating profit has become 111 crores. 2 rupees of EPS has become 1.2 rupees. So that is why heavy selling. Now, where lies value in it? I would say value lies at around 50 times earnings or so. I won't say that value lies immediately. If we look at the PE, yes, it is trading at 68, 70 times earnings. Its long term PE is around 86 times. Agreed. That is, you can say, trading at less than its long term PE, but its numbers have not been that great either. So once it comes to that range of 50 to 55 P, that is where you should start buying. Now, if I consider that they do an EPS similar to this in March, say 1.2 rupees, so that will be 2.4. And let me calculate this. So this will come out to be something like, let's see, 2.4 for these 2 quarters plus 2 plus 1.7. So this would come out to be 6.1 rupees. If I calculate with say even 55 times, we are looking at 335. I won't say, let's say if we look at 60 times, then this should be around 366. So anything around 380 to 350, 380 to 350 is where Jubilant Foodworks could be looked at very seriously, not at this point of time. So dip of around 10 to 15% even from current levels is where one should look at Jubilant Foodworks. The kind of numbers it is producing, it's not giving confidence to large investors, and that is why probably they are leaving. Another thing that has happened is this: in March 2020 they had virtually no you can say debt, and eventually the debt increased to 2000 crores. This is also a very big red flag as to why a consumer company, direct cash company, not an L&T, not a Cummins or an ABB, is having such huge borrowings compared to the kind of, you can say, reserves that they have of 1900 crores, etc. So this is where things are looking extremely dicey, and probably that is the reason why somebody is not looking at Jubilant Foodworks at the moment. But around 360, 355, it should also look attractive provided that the numbers remain stable here and do not dip even further. If we look at the shareholding pattern, then that is also that has been stable, that has not gone haywire. But I think in the March quarter, you'll see a lot of difference in here in FIIs and DIIs numbers. Promoters will remain the same, but FIIs and DIIs, there should be some amount of selling. So that is exactly what is happening. We'll see it in the March numbers, etc. So overall, it's an avoid at the moment. 360, 355 will be where one should look at the stock. Santosh, thanks for your contribution. Can we buy Voltas and NBCC here for 6 8 months? Voltas is a buy. I would say Voltas is a buy. NBCC, uh, yes, you can. I think it is at stable levels at the moment, but keep strict stop losses in Voltas around, I think, 730 or so. In NBCC, you can have. So in Voltas, currently the stock is at 822. Finally, it has started moving towards the 200 DMA. Your stop loss now becomes in here of around 775 or 770. So with a stop loss of 770, Voltas can be bought. If I look at NBCC, especially after the recent announcements, etc., the stock is around 35. Uh, it is at critical support levels. I won't say that looking extremely good. Uh, Around 34 is your strong support. So with a stop loss of somewhere around 32 you can buy. So a 2.5 rupee stop loss you can buy for 7 8 rupee upside here. But Voltas is a better pick in these two that you can really look at. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you can get videos straight away when I post it. And kindly do support me on Patreon if you want to interact with me one on one. Want to have small cap watch list, a large cap, mid cap, large cap watch list. There are two watch lists that are available there. You can ask me queries there, and plus I give 3 to 4 you can say buy calls or calls from a medium term to a short term time horizon as well. So you can definitely become a member there. You can become a member on a yearly basis on WhatsApp as well, or you can become a member on YouTube as well. You can take your pick and you'll get all the benefits of Patreon in there as well. Thank you. Thanks a lot.